Hey everyone, welcome back to Corporate Decoder, the place where we untangle the financials and tell you what it really means. Today we're looking at Creative Media and Community Trust Corporation, and let's just say they had a rather significant event unfold. Alright, so this filing is an 8K, which means it is reporting a really important event that investors need to know about pretty quickly. For Creative Media and Community Trust Corporation, that event is the completion of a big sale. They've sold off one of their subsidiaries, First Western SPLC LLC. The deal officially closed on the 21st of January 2026. This wasn't a surprise announcement. They had previously let everyone know back in November 2025 that this sale was in the works. So, who is Creative Media and Community Trust Corporation? They are the parent company, and First Western SPLC LLC was one of their subsidiaries. Think of it like a big company selling off a smaller branch of its business. Their main stock you'll see is their common stock, trading under the ticker symbol CMCT on the Nasdaq. This section is all about that sale. The company, Creative Media and Community Trust Corporation, along with its subsidiary First Western, sold all of First Western SPLC LLC to a buyer called PGFR Holding LLC. The price tag for this subsidiary was about $44.9 million. Now, it is important to note that this amount is after they accounted for some outstanding debt related to certain loans. After all the dust settled, including paying off other debts and covering expenses, Creative Media and Community Trust Corporation pocketed around $31.2 million in cash from this sale. That is a pretty tidy sum. Following up on the sale, the company also released a press announcement on the 22nd of January 2026 to make sure everyone officially knew the deal was done. This is standard practice to keep investors informed. Now, this next part is where things get really interesting, especially for us at Corporate Decoder. This section is about the financial impact of this sale. They've included pro forma financial information, which means they're showing us what their financial picture looks like as if this sale had already happened at an earlier date. Let's dive into the numbers. This is their balance sheet showing what they owned and owed as of the 30th of September 2025, but adjusted to reflect the sale of First Western. On the asset side, their investments in real estate remain steady at around $702.7 million. That is a core part of their business. Their cash and cash equivalents saw a significant jump, going from about $17.3 million as reported to a pro forma $46 million. That increase of over $28 million is largely due to the proceeds from the sale we just talked about. On the flip side, their loans receivable net, which was around $51.5 million, is now zero in the pro forma numbers. This is because the loans receivable were part of the business they sold off. Looking at liabilities, their debt also went down substantially. The reported debt was about $527.8 million, but after the sale and some debt repayment related to it, the pro forma debt is around $497.2 million. That is a reduction of about $30.5 million in debt. Something that stands out is distributions in excess of earnings, which is now a negative $1,045,014 on a pro forma basis compared to a more negative number before. This indicates that the company has been distributing more in dividends or buybacks than it has earned over time, a common theme for some real estate investment trusts. Now let's look at how this sale impacts their earnings, or rather their losses. This is for the first 9 months of 2025. Pro forma. Total revenues were about $88.2 million as reported, but after accounting for the sale, the pro forma total revenues are $81.5 million. The main revenue driver, rental and other property income, stayed the same at about $49.2 million, but interest and other income decreased significantly as that business segment was sold. Total expenses also came down from about $114.3 million to $108.4 million, mainly because they are no longer incurring expenses related to the First Western business. And here is the headline. For those 9 months, the net loss attributable to common stockholders was a whopping $43.9 million as reported. After the pro forma adjustments, this loss actually widened slightly to $44.8 million. This might sound bad, but remember, a significant portion of the business that generated revenue and expenses is now gone. Looking at the per share numbers, the net loss per S-share for basic and diluted was around $63.18 as reported, and it is $64.46 on a pro forma basis for those 9 months. These numbers reflect the impact of the reverse stock splits mentioned in the filing, so what looks like a huge perf. Share loss is actually the result of fewer shares representing the same overall equity. Let's also take a quick look at the full year 2024. Pro forma. Revenues for the year were about $124.5 million reported, coming down to $113.8 million pro forma. Again, the interest and other income linked to the sold business is gone. Total expenses also decreased from about $148.7 million to $141.1 million. For the full year 2024, the net loss attributable to common stockholders was a hefty $73.3 million. Pro forma, this loss is actually a bit bigger at $75.7 million. And on a per share basis, the net loss for 2024 was $431.43. The pro forma figure is $445.31 per S-Hair. Again, these large per share figures are due to the reverse stock splits we mentioned earlier. The notes following the financial statements provide more detail. It explains that these pro forma adjustments are based on preliminary estimates and are subject to change. They detail how the cash proceeds were used, including paying off specific debt facilities and covering severance costs. And lastly, we have the signature section. This is where the company's Chief Financial Officer, Brandon Hill, certifies that the information in this filing is correct to the best of his knowledge. Now, let's put on our analyst hat. Creative Media and Community Trust Corporation seems to be strategically reshaping itself by divesting a segment of its business. Selling First Western SBLC LLC brought in a good chunk of cash, over $31 million, which would help shore up their balance sheet. However, it is clear from the pro forma statements that this business was a significant part of their operations, contributing to both revenue and expenses. The resulting pro forma net loss figures, even after the sale, highlight that the remaining business still faces profitability challenges. The large per share losses, while amplified by reverse stock splits, point to a cumulative struggle to generate positive earnings for common shareholders. Investors should watch how the company deploys this new capital and whether the remaining operations can achieve sustainable profitability. One key risk is whether the core real estate and rental income business can compensate for the lost earnings from the sold segment without further diluting shareholder value. Alright. That is our breakdown of Creative Media and Community Trust Corporation's latest filing. What is your take on this strategic shift and what it signals for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community linked in the description for more in-depth discussions. Thanks for watching. See you next time.